Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, daily chart of the ES. Well, it fell right out of bed yesterday, didn't it? Um, just that's just about as ugly a day as we've had in over a year. I mean, if you're a bull. So where do we stand now? Well, let's understand what we've done. We've gone, and I know this is a really busy chart. It's a daily chart of the ES, and it's got some fib levels on it that I want to talk about. Um, Let me clear those off first. We'll bring them back in a minute. Okay, first things first. We went down to test the yellow line here, which is the 100-day exponential moving average. And people always ask me, why do you use exponential moving averages versus simple moving averages? And it's just because in my experience, I think they work better. And they worked yesterday. Came right down to test the 100-day exponential moving average. This gray line here is the third standard deviation Bollinger Band. So a breach of the third standard deviation band and a bounce off the 100-day brought an end to, just some really straight down action. And yesterday, I really was the first day in a long time that I can remember having some actual tinges of fear and panic, through, either Twitter, definitely on CNBC, about, whether we were falling into the abyss. And let's put this in perspective. We traded 1685.75 on May 22nd, 1 month ago, okay? And we traded from 1685.75 down to 1577. So before, people get too upset about what's going on, let me do this for you. Let me back that out, okay? We are still in an uptrend on a longer term time frame. To test the 200-day exponential moving average, not only would that not be bearish on a long-term time frame, it would be expected on a long-term time frame. So if that's what we intend to do, then what you need to do is you need to prepare yourself. If you're one of these people that just buys the market, you can't short it for whatever reason, either you can't or you don't want to, or shorting scares you, then you need to, there's going to be dips to buy, but you can't blindly buy them with the fervor that you've been buying them with. You have to buy them with a mind towards towards selling them. And wait until we get down to some lower levels before you do any longer term buying. I fully expect that we're going to bounce. We've bounced as high as 97. We've given 8 of those handles back. I think you've just got a lot of nervous traders right now. It's options to expiration today. I do think we are going to bounce a little bit. So let's zoom in and talk about where. But the bottom line is right now, we punched the third standard deviation band. We've already moved back up inside the bands. But it would appear that the market is probably going to want to do a little bit more. But I will say this, if we break 1577, I don't care if you got long yesterday, I don't care if you're underwater, I don't care if you're 50 feet underwater. You need to manage your risk. You can't trade this dip like any other dip and just assume that it's going to come back. Those days are over. Okay? We're in sell rally mode. We are living below the 20-day. We're living in this half of the Bollinger Bands. This is the sell rips half of the Bollinger Band. This is the buy dips half. This is the sell rips half. So understand where you're living right now. Okay? You're on the other side of town. So you have to act like it. Let me put those fibs back up real fast. Okay, the fibs are back up. And let me zoom in. And what I always do here is I like using fib levels when we get to extremes in order to see where they cluster and bounce. So I've got 3 sets here. I got 1340 quarter to 1685. That's the yellow line. I've also got um, 1685 to 1577, and I've got 1649 to 1577. So I want to see where these all come together. We came up to the 98, but we've got 1604 and then 1608 to 1613. So this area in here has got some real congestion. I would expect this to be a resistance area on a bounce. So if we do bounce up if we get through 1604 and get up into 1608 to 1613, and it starts to show as resistance, that's an area to start thinking about maybe putting some shorts back on. You've also got resistance 32, 33, and you can see the triple, you can see the fibs here. That's the area where it failed after the Fed yesterday. So just some areas to look at. Okay? So everybody have a fantastic day, fantastic weekend. Mike Vacchi, PrincetonTrader.com. I'll be back Monday morning with another webcast, everybody. Trade them well.